McLean home prices dropping? Here's what the numbers really say. June real estate data is here for McLean, Virginia, starting now on the Foundations Report. I'm Eric Fafoglia with the Strong Foundations Group of Compass, and I'm based right here in Great Falls, Virginia. I help buyers and sellers here in McLean, Great Falls, and the greater DC area make confident buying and selling decisions using an education-first approach with my 208-step selling process and 128-step buying process. Let's jump into the June numbers. The median sales price in McLean this last month came in at $1.29 million, down 16.2% year over year. That's a notable shift, especially compared to Fairfax County as a whole, where prices held pretty much flat at $780,000. But a dip like this doesn't necessarily mean homes are losing value across the board. In McLean, where the average price point can swing dramatically left or right based on what's selling, we sometimes see these kind of drops with fewer high-end homes trading hands in a given month. Homes took an average of 10 days to sell, up 25% from last year. That's still a relatively fast sale, but slower than what we're seeing in Great Falls or even across the county. Sellers received 97.3% of their original list price, which is down slightly year over year. That tells us expectations might be outpacing reality right now, likely driven by higher interest rates and affordability challenges. Active inventory in McLean is down 17%, with 359 homes currently for sale. While that might sound like a lot, the number of new listings in June was just 101, down about 4% versus last year. Meanwhile, 91 homes sold, which is up 18% year over year. That's an encouraging number and suggests that buyers are still in the market, but they're being selective. The month's supply of inventory in McLean sits at 4.3 months, down from last year. That's technically leaning towards a balanced market, but with fewer new listings coming and steady demand, we could see conditions shift and more into the favor of sellers again, if inventory continues to tighten. One standout data point, only 3 new construction homes sold on the MLS in June, down 70% year over year. That's a massive drop and clearly an indicator that builders are pulling back. With elevated build costs and borrowing costs, speculative development just isn't making the most sense right now. So what does all this mean? It's tempting to think that McLean's market is softening, and in some elements it may be, but it's not a collapse. It's just a recalibration. Luxury buyers are being more cautious, and sellers who adapt through strategic pricing and really strong presentation are still finding success. We're watching the same national headlines as you, but here's what matters locally. If closed sales continue to outpace new listings and inventory continues to tighten further, that will put upward pressure on prices. Looking ahead, all eyes are on the Fed's meeting at the end of July. A rate cut could ease bond yields, which would bring the mortgage rates down and possibly more buyers back into the game. That's the latest for McLean, Virginia for the month of June. I believe that if you're planning a move, a strong decision starts with a strong foundation of knowledge. If you'd like to better understand what these trends mean for your home or your long-term strategy, I'd love to talk. I'm Eric Fafoglia, and I'll see you next month on the Foundation Report.